All right, we saw that yesterday was an incredible day in the markets. We do have to be forward looking though, so I'm going to talk about what we saw. I'm going to talk about what we could potentially see next coming up for us in the markets, including some catalysts that we have to watch. The first one starting at 8:30 today, another one at 8:30 tomorrow, then 10 a.m. tomorrow. So we're going to get all into this video, and I'll tell you what, guys, yesterday intraday trade up 64%. My dollar cost average positions, I initiated a triple leverage Qs position when we hit the bottom around that 23.6. That skyrocketed yesterday, so that was pretty awesome to see. IWM as well. Actually, I did it through V2, the Russell 2000 stocks, but I also started that yesterday, absolutely blasting off. So let's take a look at the charts, and we'll also talk about what we need to look forward to. And if you guys want to see my trades, my technicals, my buys and sells, and the other panel experts, what they have to offer as well, we have a Discord together. You can find that link down in the description. You can click that, sign up, and then make sure that you go for the earner tier so you get access to absolutely everything. So let's jump into the charts here to see what happened yesterday and talk about where we go from here. So the Qs. If you've been watching my videos, I talked about the two gaps that we have back from here. I should say had, because I updated this from saying gaps to gap filled, because yesterday in one fell swoop, jumping up 12% from the previous close. And I said that this was critical support. Been talking about it since before we ever got there. And the 23.6 being right here, which is also something that I talked about. Let me zoom out so you can see. There we go. So you can see that inflation, tariffs, recession, and fears. 23.6, and then down below that 38.2 would be with some sort of confirmation. Well, the tariff thing right now is looking pretty shiny, so that helps us stay with 23.6 being a at least near-term bottom for us. Now, inflation, we get inflation numbers today. CPI 8.30, PPI tomorrow 8.30. We'll see how the prices have done us. If they come in soft, we're going to see a really nice day in the markets. At least in my opinion, that should take away more of the downward pressure that we have. Michigan consumer sentiment at 10 a.m. on Friday is the next big thing that we're watching for. And I do say next big thing, but I should take the time to mention that honestly, one of the next big things is hearing that things with China during with the whole trade war going back and forth with the tariffs, and instead of further steepening with China, that we actually see a deal being made and a de-escalation there. That'll be one of the next big catalysts that we see outside of the economic reporting that we have. So be on the watch out, the watch that we saw what happened with yesterday with the suspension for 90 days of those tariffs until some more further deals can be made. We want to hear a similar thing for China. I'm hoping that we hear that before the end of the week, but it's anybody's call as to what's going to go on with that. So we'll keep an eye out and we'll know if good news happens, because the market will absolutely jump again. Maybe not as much as we had the last time, but we should see a further release of downward pressure on the markets and maybe a little bit more recovery. So in the spirit of recovery, where do we go? So that jump up that we saw yesterday brought us to pretty much where we're at before the big drop-offs happened, going back to Wednesday, April the 2nd into Thursday's trading, returned us right back to it. Look at this blue 20-day that you have coming down across your screen. That's the next thing to get up over, and right now we're still down below it. And as a matter of fact, we're tracing a little bit in the pre-market hours. Fingers crossed on inflation reports that they can help us out. Fingers crossed on Michigan consumer sentiment that helps us out. We'll see with some of those pull forward orders that we saw for January, February, March, because this is a March report. We'll see how it does us for inflation. Hopefully those numbers come in soft, and we just have to watch and see what's happening for us. We definitely want to stay away from anything that signals high inflation or recession or a further collapse in GDP. If it is at all collapsing, remember the 4 pillars that I talked about, and then also labor market numbers that we see coming out, which also at 8:30 today, we get initial jobless claims. So as long as the wheels didn't fall off the cart on that one, we should also be all right there. So let's move over to SPY. SPY pretty much coming up almost to the same area that we were at with Wednesday. Before that, down below the 20-day a little bit. We want to get up on top of that. The next contender is the 200-day. Same thing for the Qs. Getting up on top that 200-day is the next big thing that we're looking for. So if we can take the 20-day, this blue moving average that we have here, then we got to watch and see, probably get a rejection off the moving averages, which the 50 and the 200, man, they're darn close to crossing each other, almost showing us that death cross moment. And that does lag the actual movement that you have. So it could still be coming our way, but we want to watch that upward climb. Where is it going to stall out for us? So we hit this fairly critical resistance area up here. We have not filled the gap on SPY. Maybe bank earnings will help us out, because there is quite a few banks in the S&P 500. So moving over to IWM, this monthly chart that we're looking at, I said that we visit down below the green line, that IWM comes to life up above the green. Well, currently we are trading back up above the green. I started my dollar cost averaging down here below it because you usually don't stay there for long. Now, pre-market, we're pretty much right back down to that support. We'll see how that treats us. This is the monthly chart, though. If we go to the daily chart to see that rip, we closed the first gap. We did not close the second gap. So much like what we saw for the QQQ and what we saw for SPY for the NASDAQ 100 and for the S&P 500, we have a little bit more to go in order to get there. Taking a rougher time, if you will, than what those two will, because they have smaller companies, and those companies, they still need the easy monetary policy. They still need the low inflation to come in. The tariff thing definitely didn't help them out, but the suspension of those tariffs is starting to help them out. So now that China, that last shoe to fall, if you will, for the tariff thing right now, some deal to be struck really would help us out in filling those gaps and hopefully getting back up on top the 20-day. You can see the death cross has already happened. We want to get back up into this bull channel area and stay here. So far, we're in it. Now we got to keep it. And so we'll see what happens for us. 10-year Treasury, because I mentioned it yesterday. Look at the collapse that we had for the 10-year Treasury. And as soon as that news was announced, you saw those rebound. For me, I was watching TMF on the intraday chart, and I have mentioned about the bread recipe. As a matter of fact, I was looking at the 5-minute chart. Let me go down to 5 minutes. There we are. So I was looking at the 5-minute chart, and if you are at all a follower of the Discord or of the channel, you'll know that I've mentioned the bread recipe, that you have a bread bot over at the Discord that will tell you when these big swings are about to happen. We had this big candle right here on relatively good volume, and let me actually take down the simple moving averages. We'll put up the EMAs. We had the EMA cross. As we were onto this next candle, this is where I entered my trade for TMF, and 15 minutes later, this candle happened. I ended up taking it, well, I got stopped out at my price target, 64% up from where I was at 15 minutes prior. And I shared the purchase over at the Discord, and I also shared the sale over at the Discord. And also, meanwhile, during that time, we had the Qs go bonkers. We had, pretty much everything in the stock market start to feel some relief, if you will, based on what we heard from the tariff news that came out for us. So where do we go from here? We're tracing a little bit today. I guess that's to be expected. We want to watch those inflation reports, watch Michigan's consumer sentiment, and absolutely we want to see news of a de-escalation for the trade war for the U.S. and for China. That should really, really help us out in terms of getting some further upward pressure going in the markets, or you could say a further release of downward pressure, finally getting us back up on top that 20-day. I cannot tell you how critical it is to see further bullishness, that we get up on top the 20-day. As long as we stay down below it, we'll likely keep on falling down and then reverting to the mean, which will bring us back up again before falling back down. When you get up on top that 20-day, then you push up to the upper side of things, and then when you revert back down to the mean, you pull back down, but then you bounce again to the upside. So getting up on top of the 200 is also the next thing that we're looking for after the 20-day. So where could we potentially go? We could potentially turn this into a bullish thing. It starts at the 20-day, moves to the 200. It's what I'm watching, at least in terms of moving averages among the other technicals. I do share my technicals over at the Discord. So do the other panel experts that are over there. You guys can do your own technical analysis using our advanced charting tools that are available at the Discord. You can use the bread bot to see when those big moves are coming, to see, hey, this looks like a good time for me. Is it? You can check the bread bot, which doesn't tell you when to buy or sell, but it does indicate when those moves could potentially be happening. And I'll tell you what, it's the trading strategy that I use. It is top notch. There's tons of products and services over there, thousands of community members, the most positive community I've ever had a chance to be part of. Everyone's striving for financial freedom and all supporting each other in that pursuit. And if you guys want to invest in yourselves a little bit more, there's coursework down in the description through Stockmo Academy for technical analysis, trading using technicals with the bread recipe, so you can trade like I do, like Stockmo does. And then you can also learn about trading options. There's an options course there as well. You can save a ton by bundling them. You can save even more if you use the code word doctor when you sign up for those courses, DOCTOR. Thank you guys for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.